For the land of the free and the home of the brave.
Good Monday morning, streaming live on Rumble, X, and YouTube on this Monday, October 6th, 2025. Hoping you all had a great weekend. We've got a few in the chat already this morning. Jay White, good morning. BDG, yeah. Trumpet, and Zero Woke Points. Thanks for joining us. I'm afraid that, we have to be the canaries in the coal mine that are willing to put some of this stuff out there because there's a lot of stuff going on in the world. I don't know what the mainstream media is going to cover today. I don't even know what the alternative media is going to cover today. But there's a lot of stuff going on, and this is going right where we thought it was. We've had a lot of diversions in the U.S., right? Charlie Kirk, cover that in a second. We've had, we knew that this LDP, this election in Japan, could have an impact, and it has. And then we see the Prime Minister of France getting canned after, again, you can see the turmoil in France over and over and over again, and the UK, right? It's not hard to see the turmoil in these locations. Now, Germany stayed pretty quiet. Frederick Merz is kind of keeping a lid on things. That's kind of the German way, so I'm not surprised by that. They're pretty good at that. So, I mean, being German myself, partially, I know the culture and the mindset. But the point is, so we've got all that stuff. And then at the same time, okay, we see that the U.S. is, all indications are that we are giving coordinates and long-range missiles, okay, to Ukraine to make attacks, strategic attacks on oil pipelines and so forth in Russia, and maybe even deeper into Russia, okay, 1,000-mile range. Some of the big names you've heard of, the ATACMS, the Tomahawks, this kind of stuff. And then, of course, the drones, right? These drones are really coming on strong, right? Anduril, who we've talked about multiple times, that's Palmer Luckey, being funded by, again, the Peter Thiels and this whole crowd, this technocracy crowd. So there's a lot of stuff to pull together today. And then we have the government shutdown, okay? So we're on day 6 of the government shutdown, and we also have 6 days in a row where the stock market hasn't seen a losing day. So go figure, right? This is the way things work, right? This is the upside down of the markets, and it's always been this way. It just seems to be getting amplified more and more and more as we go. So we're gonna have to watch this. We'll look at that. I think we'll look at that today. For sure, today's Currency Monday, so I for sure want to take a look at the currencies. And try to put this picture together and see how the bond markets and the currency markets actually react when we see this stuff go on this morning or overnight. I don't know exactly when this, when the French Prime Minister resigned. And again, we don't know all the pressures behind why the French Prime Minister resigned, but we know that it happened, and it just shows the turmoil there. Okay, so trying to connect all this stuff with the currencies and so forth. All right, so I'm hoping you all had a great weekend, and I'm just going to spare all that. We might as well just get after it. What my weekend was like, anyway, I'll just say it quickly. It was nice. I took a little time off on Saturday, worked in the morning for a little while on some stuff, and then went to a cross-country meet for my daughter, and then, kind of vegged out a little bit, taking some naps and recovering from the week. Because we're doing a lot of stuff, working with Aaron Day and Courtney and Patrick Wood on some things, and doing a lot of work on, that feeds into this technocracy roundtable, and trying to help support Aaron in any ways that I can, and doing the research so that we can assemble this stuff, right? Try to come at this from the financial angle and make sure that I show up with my part of it, okay, to this roundtable and to support these guys on their technocracy pursuits. This is very, very important, and this stuff's moving very quickly. Okay, so economic data. Let's just get after it on the economic data for the week. We don't have, as we said, we don't have the. Obviously, we're in the government shutdown, so we're not going to get a lot of data. But it's pretty obvious what's going on this week. You'll see here in a second as we go through this. So again, I always like to have a theme for the week. Last week, it was about jobs, and it didn't work out, right? Why is that? Because the government shut down, and we didn't get get Thursday jobs data, and we didn't get obviously the non-farm payroll on Friday. So again, it was supposed to be about jobs, but it wasn't about jobs. And we talked about that extensively. We're not going to get the CPI data unless the government opens up. We're not going to get PPI data. We're not going to get retail sales. We're not going to get this jobs data. A lot of things we're not going to get before the Fed meets again at the end of October. Okay, and then we're also going to have Bank of Japan. We're going to get into that today. They're going to meet the end of October too. So I think we meet the 29th, and the Bank of Japan announces or meets the 30th. So again, that's this. You can see toward the end of the month, this is going to build again toward these central banks, and it's heating up on two fronts because this election of Takaichi in Japan, first female prime minister, and in Japan, again, red flag. Okay. Nothing against women, but I just see more and more women being put in these positions. Now, did she earn it? Was she placed in there? It was sort of a little bit of a surprise. I don't know, right? I don't know how rigged these elections are. I just know that it's just funny to me, right? Why does this matter? Because it's harder to get mad at women. Okay, so put them in the roles, and then when you have issues, they shed anger a little bit easier than the white male. Okay, so let's just call it what it is. All right, people don't have a problem, So we'll get to that here in a second. All right, okay. So here's the theme of this week, right? And I don't think it's going to get interrupted by much. All right, we have kicking off today. We have ECB President Lagarde speaks. Then we have Bank of Governor Bailey speaking. And then we get a 30-year bond auction in Japan tonight. Okay, that's going to be interesting on the back of this Takaichi election, which we'll get to. We get a little bit of data out of Europe, German factory orders. That comes out tomorrow. Switzerland, anything I can keep an eye on with Switzerland. This one may matter, Swiss foreign currency reserves. We'll talk about that one tomorrow. And then here's the real key for the week, okay? This is where it starts. 13 speakers, at least 13 FOMC speaking engagements this week. Sometimes some of them speak twice, but 13 FOMC speaking engagements this week. That's a lot, okay? Especially since it doesn't even start until, I think there is one today. There's one on Monday, but then the rest of them come throughout the week. So that's a lot. What is this? It's narrative control, right? It's trying to, and let me just briefly cover this for a second. The battle right now is, we're going to cover this when we get to France, but the real battle here is, can you make your bond market seem better than the others? And if that's the case, how are you going to do that? Well, a lot of it can be done with the FOMC. Okay, as they come out and they speak, and if they can create some sense of safety or stability, okay, that the U.S. is perceived to have the most safety or stability relative to other major economies around the world, then what does that do? It brings money into the U.S. through the U.S. dollar, into the U.S. debt markets, into the U.S. stock markets, into other things that are U.S. based, maybe even U.S. real estate to some degree. Okay, now these capital flows are fleeting, so we have to look: is it fast money, or is this stable money that's just going to keep coming in? Why would it keep coming in? Because there's fears in Japan, there's fears in Asia, there's fears in Europe, and we're starting to see this with the UK, with France, even with Germany in a lot of ways, even with all the major economies. Okay, so can this narrative control this week? Let's just see what these FOMC speakers do, okay? Without the data, they're not going to have data to talk about. They are getting data, okay? So they're getting plenty of data, right? They get the raw data. So the data that goes through the government and then gets manipulated by the government, that's after the fact. So yeah, the Fed's going to look at that, but they get a lot of the raw data coming in before that. So they get to look at all this data themselves, and they get to do it however they want it. Okay, they can look at it. So we can't be fooled by the fact that they're and feel sorry for them. Oh, the poor Fed's not getting any data. They're not going to get CPI data or retail sales or jobs data. They get a lot of this data raw. And not only that, they have their fingers, if they want, in a lot of different places, because they have 12 branches around the country. So they get a feel for every region. And so they get data inputs. They get word of mouth, right? They're talking to banks. They're talking to different institutions. So they know, okay, so we can't feel sorry for them, all right? There's none of that, all right? And what's the narrative control this week with 13 FOMC speaking engagements or more? There might even be some that pop up in addition to that. Okay, so there we go. That kicks off tomorrow with Bostic, Bowman, and Moran. We know Moran, right? He's been placed in there to be a catalyst for change, a dissenter, dissenting against the rest of the FOMC board. Last week we saw Cook. Her President Trump's been trying to get her knocked out, but the Supreme Court ruled in her favor against President Trump, so she's still in until at least January of 2026. I wouldn't be surprised here really soon that we're going to start seeing talk of who the next Fed chair is. Okay. Fed Jerome Powell, he's going to speak on Thursday, I think it is this week. Yeah, Thursday. So he's going to speak on Thursday, and I wouldn't be surprised if this is one of his last major speaking engagements. Maybe, he'll speak at the October, but again, his influence starts to dissipate, especially if a new Federal Reserve chair starts to come in. Okay. And with Moran in there, it's kind of like, boy, I don't know if this is a good analogy because most people don't understand bike racing. But in bike racing, like the Tour de France, the key is to send riders up the road, right? You want to get them out front. And then that way, if you need them, they're out front. If they're behind you, there's no way you can get to them, right? So if you need help or something like that, it's nice to have riders out front of you so that you can hitch onto them, right? Or if you need a bike, or you need food, or you need water, or you need support, right? You need someone, just mental encouragement, they're out front of you. So in races, they love to have these riders out front. Same kind of a thing here with Moran, okay? I think he's kind of that, right? He's kind of that rider they've sent out front, and he's the guy out there that can push and push and push, right? And then if they need him, he's on the inside, hearing what's going on, giving feedback. So the Fed is this private institution that they're going to claim is private, and that's why they're not influenced by the government shutdown. But are they really that private? Is information being leaked out? I think we always have to assume that it is, okay? And Moran has contact, or he can send signals right back to the administration, to whoever it is that needs it. There's a lot of gamesmanship going on here, and it's not all what it appears to be, I guess, is my point. Okay. FOMC, 13 of these this week, okay? You can see again, then we start on Wednesday. Musalem, Barr, Kashkari. Kashkari was involved in the 2008 real estate crisis under, what's his name? The Secretary of the Treasury. I'm drawing a blank. Boy, I'm drawing a blank on him. Anyway, through the whole real estate crisis, man, I can't think of his name. That's crazy. Anyway, Kashkari was his right-hand man. So he knows exactly what went on in the 2008 real estate crisis. He's been through tumultuous times before on the inside. Okay, so he's now, I think, the Minnesota branch. And he had a run for governor in California. So this guy is another one to watch, right? Goolsby's one to watch. Kashkari's one to watch. Really, they're all to watch. But I think these two have interesting backgrounds. Okay, then we get more of them on Thursday. We get Bowman and Barr. And then Fed Chair Powell speaks on Thursday. And then we get on Friday, Goolsby, Musalem. Okay, so again, lots and lots of Fed speak. And then we're going to get in the U.S., we're going to get a 10-year bond auction on Wednesday. Want to watch how that goes over. This is what we're talking about, these debt markets, right? And all the things that are going on that I doubt is going to get covered. So that's what we're trying to do in here, is cover this stuff, because nobody else does, and so hardly anybody else does. And so, and then let's see what else we get. Then we get on Thursday, we get a U.S. 30-year bond auction. So we get a 10-year, actually the one on Wednesday, I hate calling it a bond auction. They do that in the data, but it's really a note, right? 10 years and less is a note. 10 years and above or anything above 10 is a bond. So anyway, but we'll just call them bonds. So it's a 30-year bond auction on Thursday. That one's correct. And then Friday, we get Canadian unemployment change. Just watching that because neighbors to the north, interested to see how they're doing economically with some of the stresses of the tariffs and all the other things that have been placed upon them. Again, we know that Mark Carney is a globalist. What's he up to up there? Haven't heard much from him in a while. Wouldn't be surprised to see him surface on occasion again with something, okay, some news event. Again, just when you haven't heard from him in a while, I like to think about them. When they're in the news. Same thing with Sheinbaum, right? The Mexican president. Haven't heard much from either Mexican Claudia Sheinbaum or from Mark Carney in Canada. To me, that's like something's cooking, right, on this trade negotiation with Canada and Mexico. So why does that matter? Well, we want to look at the currencies, right? We'll watch the currencies because they'll get a whiff of this. So we'll look at the Canadian dollar this week, probably not today, but we'll look at that. Maybe even look at the Mexican peso one day this week in reference to either the bond market, debt markets on Tuesday, or maybe even related to energy. We might take a look at it on Wednesday. I need to do a little bit of work on those too. But very, very interested in these currencies because we're starting to see some cracking going on. And remember with the currencies, a couple weeks ago, people said the currencies are super quiet. We think that the currency volatility is gone for good, right? It's all been managed. When I hear that, it's like red flag. It's usually the exact opposite. So I think currencies could heat up here in the near future and start making some significant moves. And then Friday, they close out with Europe. There's some ECOFIN meetings. Probably not a big point, but it probably wouldn't show up on the weekly, on the key things of the week, but because we're light on data, I put it in there, and it's always one to watch because it probably won't really kick off. These are the ones that roll through the weekend. So you usually have meetings start up on Thursday night, then Friday they kind of go, and then they go all day, and then they'll roll over into the weekend. They're usually 2, 3, 4-day meetings like this. And why does it matter? Again, because Europe's under stress. And so it's interesting to see if there's anything that comes out of that. Okay, let's keep rolling here. We take a look at Friday. Again, we didn't get the jobs data on Friday, so we had a bunch of kind of just ho-hum numbers across Europe. The key here is that France was negative PMIs, Germany, negative PMI, EU overall, negative PMI, and the final services PMI out of England, negative. Now, France and Italy were a little bit, they went against the grain. They were up. That was a big takeaway. You can see everything except the top data point there was PMIs. So again, it's a way to compare countries against countries to some extent. When you get big swaths of data and all the PMIs come out like this, it's kind of interesting to look at it that way. So again, everything pretty much negative except Italy and Spain, and those two aren't popping up in the news in terms of stresses. Remember, North and South Europe, important to pay attention to this because we go back to the Greek crisis. Right around 2008, 2009, there's a whole story behind that thing. But again, it was North and South, right? There was big issues. Germany, Angela Merkel kind of left the South for dead. Greece left them hanging out to dry. And then the excuse was, well, let's just let them all migrate north, right? So we had this, so Europe had this mass migration as a result of, the 2008 real estate crisis, the flow over into Europe. The fact that Greece really didn't belong in the EU, but they'd put them in there anyway, and it was easy pickings, right? Greece was a sitting duck, right? The way they got into the euro was a scam. Goldman Sachs, Mario Draghi, right, who was at that time the European Central Bank leader, just like Christine Lagarde is now, he and Goldman Sachs had structured a currency trade that was levered like 4-to-1 to bend the parameters to get Greece into the EU. Okay, so they should have never been in there in the first place. So when the euro went up, they were a sitting duck, okay? And so that's essentially what happened. And that currency fluctuation allowed this North and South divide and Angela Merkel to play a very strong role between the North and the South and allow this mass migration to occur, right? They put her on the headlines as Mother Merkel, right? Like, she was Mother Teresa, that kind of a thing, And so they really played this thing up, but it was really a big scam, okay? And you can look back on it now and you can see what they were up to. All right. Okay, so we got economic data today. We get out of Switzerland, this unemployment rate. Watching that, 2.9 expected. It came in at 3. So again, we're seeing inflation. I think that there's this, the real takeaway I have at this point is that there's certain places in the world that are causing deflation, like China. Okay, we talk about this, making products, dumping them on the market, steel, electric vehicles, plastic, things that end up at Walmart, all the junk that China makes and sells. And we buy it, because it's cheap and it's, and we're a consumption economy. So that's what we do. The point is that that there is inflation out there, and there's also deflation out there. I think there's driving forces for both, okay? So we're trying to keep those separate. There is the deflationary force going to win, and that tends to mean a higher US dollar, or is the inflationary force is going to win, and is that negative for the dollar, okay? And so we look at all the technology, we look at the technology, the AI, right? All these potential productivity advancements that can drive productivity. A lot of times means reduction in cost. Okay. So as long as you can keep becoming more and more productive, you kind of keep a lid on this inflationary force. So the innovation of people tends to keep a lid on things, prices, right? Because you're getting more and more efficient, more and more productive. At the same time, these crooks, right, keep driving up inflation in other ways, okay? Because why? It allows them to run more debt up, okay? Use the debt against us. Keep us on the mouse wheel. So again, back to keeping it simple, right? Dollar up means deflation, tends to, okay? At least so far, unless something changes, dollar up means deflation. Dollar down means inflation, okay? To me, deflation is good for the people because every hour of labor goes further. Inflation is bad for the people because every hour of labor goes less far, right? So when we're talking about mass amounts of people who don't have a lot of assets, deflation is good for we the people, and inflation is not, right? It's good for the few, okay? So that's the way I look at it. So we're going to look at the chart on the dollar today. Just keep that in mind. Maybe I'll reference that again, but I want to keep that in mind as we go through this stuff. So that's why we're watching Switzerland. We're watching some of these flows that are going to come through this week just to see if there's anything going on. The Swiss franc should be a recipient of Swiss franc weakness to the dollar. If this stuff starts, we're seeing signs of it, right? All that we're going to talk about today is sort of, there's a backdrop to the Swiss franc, potentially weakening to the dollar, right? And we'll try to take a look at a long term, look at a monthly chart on that, even though I don't know if I can pull up the Forex on it. I need to build some of these charts on this stuff again. Anyway, okay, so today we get ECB Lagarde. She's speaking at 1 p.m. today. Bank of England Governor Bailey speaks at 1:30. FOMC member Schmidt speaks at 5 p.m. tonight. Again, I don't think I had that on the list. So there's another speaker from the FOMC. And then tonight, the 30-year bond auction out of Japan. Those are the big topics for today. And then I think that's pretty much good. So then we get to our headlines. All right. So here's what I wanted to go through is we talked about this government shutdown day 6, no implications, no issues with the stock market. Stock market seems to love this kind of stuff, right? Wall of worry. Loves this wall of worry. The more worry you can throw at the stock market, the more it seems to feed on it. Okay, it's crazy, but that's the way it seems to work. Now, update on Charlie Kirk. Why does this matter? Well, a couple reasons. Let me see if I've got some notes. I had some notes on this I wanted to go through. Make sure I cover these things. Okay, here we go. All right. So one, Charlie Kirk had become a force. And force for the youth mostly, right? I think that was where he was making the most progress was with the 25 and unders. Not to say it didn't spill over, but I think that was the biggest place. And so let's, at least that's my perspective. If someone else has, different perspective, go ahead and throw it in the chat. Happy to look at that and get the perspective on that. But my perspective is a lot of influence on 25s and unders. Okay, that's why he was on the college campuses. That was sort of the fundamental focus of TPUSA. Okay, so, and I think I'm starting to feel like, I felt like this was a diversion from the beginning, and I'm starting to feel more and more like this was a diversion, okay? Now, is Charlie Kirk even dead? Is he alive? I mean, I don't know, right? But there's lots of red flags here that start to make us wonder what's going on here. Okay, so we see this video footage, right, of this kid, the shooter, right? No long rifle on the guy, right? Whether it's broken down, barrel stock, everything else. No signs of any... The whole narrative around the shooter doesn't make any sense, right? The kids, what did I have to say in here? I think do I have the notes on that? I wanted to go through this. Maybe it's out of order. The point is this, he had never been on this campus before. He drives 3.5 or 4 hours to go to this campus. No awareness of how to get on these buildings, none of that kind of stuff, right? At least as far as we know. They give us the footage of him running across the roof, going over the edge, jumping off, okay? But they don't show us. They would have had footage of him also in a prone position taking the shot, but they don't show that. They only show him running and then going behind, a structure on the roof that sticks up through the center, and then going behind that structure, running to the edge. And then they talk about there's video footage that shows shadows are very weird, right? So in the video footage, so it looks like the video footage has been edited. Then the kid jumps off the roof. Probably not with a rifle. Doesn't make any sense. And then you see the video footage of people walking by on the sidewalk behind him. And one of the walkers, there's two walkers, one in front, one in back, going from right to left. And the one on the left, the furthest one, closest to the building, closest to where, the supposed shooter is, goes behind a tree and disappears. So we've got video editing issues, okay, number one. So a lot of that stuff doesn't make sense. Here's where we really get into this, though. video footage has come out lately where it shows behind the table where Charlie Kirk, fell, went over, and all of his security detail. They are very peculiar things going on. Okay, they don't react when the gunshot goes off. Not like you would expect. It's almost like they knew that it was coming or it was anticipated, right? That's at least how I perceive it. Could be wrong, but that's how I see it. Okay. Here's the thing. They run around and it's an orchestrated deal. It looks like it's been rehearsed. Okay. They look, how do you put this? It looks like it looks rehearsed, but it doesn't look productive, right? It's inefficient for someone who's really been shot. Okay. And here's what I mean by this. If you're trained, and I have to believe someone in that security detail has field medic training. Okay. And so the first thing you would do in a shooting like that is, so it's easy, right? If someone gets shot in the arm or the leg or something like that, it's very easy. You put on a tourniquet. Okay. You go high on the leg, right? As high as you can to the hip, right? And you crank it down, right? And there's a certain amount of, till you see the blood, or you put a finger on the femoral artery and you say, okay, I don't feel a downside of the tourniquet, and you go until you don't feel the blood. Now, there's a risk that person could lose their leg, right? Because you're cutting off circulation and you're not feeding the tissue on that side leg, but it's better than dying, right? But it's extremities. So tourniquets are great for extremities. It doesn't work for the neck or the main part of the body. If you get a shot on the main part of the body or in the neck, the best thing you can do is either plug it, stuff it with something, and they make special stuff, special gauze that you can stuff it that makes the blood coagulate and thicken up. So again, it starts to heal off. But when you have that size of a wound, I doubt that stuffing it is going to do a whole lot. So what do? The best thing you can do is reach up, again, on the upside stream of the carotid. So if this is the heart, right, and here's the wound, you want to stick your finger on the artery right here and stop the blood flow, right? So what would you do? You'd be putting your hand and you'd be sticking it on the throat to try to stop the blood flow. Okay. Now, what's that going to do? Obviously, you're not feeding the brain with blood, so there's a good chance of brain damage, even if that thing was survivable. Okay. Now, we know the bullet, no exit wound. Okay. So what would someone do, right? You'd be putting your hand all over that thing. You'd have blood all over your hands, right? The other thing you would do is rip off a t-shirt or grab some kind of fabric and you'd start trying to stuff it in that wound. Okay. If you didn't have that special gauze. Okay. So you'd have blood. There'd be blood everywhere in that situation. Now we see the video footage and we see all the people supposedly administering care to Charlie Kirk, and no one has blood. There's no blood on anything, no blood on their clothes, no blood on their hands. And you see their hands go below the table and then you see their hands come above and there's no blood. So that's a red flag. And then you actually see one of the guys who's heavily involved in the exchanging of something, right? He's out in the crowd. Then he's supposedly, Stu Peters says he detonated something on the mic. It doesn't seem to make sense, but he was definitely involved. Guy in brown, right? He comes up on the stage. He's involved in an interchange of some device, something, keys, something, right? He gets down on the ground. He's one of the guys supposedly administering care to Charlie Kirk. And he actually, you can look at it now, and it's all to our perception, but it almost looks like the guy has a smile on his face, all right? And so it's almost like this thing is an acting, right? Like they're acting something out, okay? So again, I could be wrong on this, but that's how I see it, and I've watched the footage over and over, and like I said, I wish I had the footage and I can show it, and at some point I'll get it so that I can show this stuff. I need just more stuff to do, but get some things fixed so that I can show some of this footage, but you'll see this, or you can find it, right? You can go back and slow this down, or it's going to show up. If you're looking for it, it will show up. Okay, so you can find it. I don't mean to sound lazy or not being able to present it. It's just, I apologize for that. I'm not great on the video side of this stuff. Again, I've got some issues I need to fix, and it could take a long time. So here's the other thing, right? They said there was no exit wound for the bullet. So what are you going to do if you're a field trained medic? Okay. You're going to look for where that bullet came out. So what are you going to do? You're going to rip those clothes off of Charlie Kirk. He's got a t-shirt on. You're going to be ripping that shirt off of him, okay? Probably ripping his shirt off and stuffing it in that wound. And the whole time you're going to be looking around his body to see where's the exit wound. Because again, the whole concept is this thing came in from an angle, which isn't true. There's no way. But anyway, it hit the back of his cervical vertebrae, bounced down, went down into his heart, exploded, came out, gushed, the whole thing. So if that's the case, you'd be looking for the exit wound because you don't know at that point what happened, right? You're talking about seconds. So you're trained to react. You're trained to one, stop the bleeding. Two, look for that, figure out what's going on, stopping the blood flow, right? Because that's the biggest risk in any gunshot wound, in anything. It's not the wound that kills you, it's the bleeding out, right? Think of yourself like this vessel that carries a lot of liquid. As soon as you start puncturing holes in it and you start bleeding out, that's what kills you, right? It's not the gun wound itself necessarily. Now, if it tears your spine in half and rips your head off your shoulders, well, okay, but again, it's the bleeding out, right? It's a twofold thing. The point is, these field medics would have been looking for the exit wound. If there was no exit wound, they would have been ripping his clothes off of him, looking for that exit wound. They may not have found it, but they would have been ripping his clothes off. So this makes no sense, right? If these guys had any training whatsoever, they would have done that. And there's no blood, there's no signs. And the one guy actually, who's heavily involved, actually looks like he potentially has a smile on his face, okay? None of the security detail flinched. The one guy who seemed to have a decent, I think I mentioned that one. All right. Here's the other thing. No footage from the camera behind Charlie Kirk. All right. 4K camera, high fidelity camera, right? Would have given very clear images of what went on. And it would have shown all these guys what they were doing, working on him. Okay. So I'm going to put a video in there, a couple guys, couple ex-Green Berets and so forth, going through this. They were chewing through it, I think on Friday night. And I watched through it one and a half times, or key parts I watched through again. And I'll put the video in there so you can watch this if you want at the end of the show. All right, put the link in there. And I think it's an hour and a half, and you can fast forward. You can see where they're talking about the different videos and so forth. I recommend watching the whole thing because, again, these are a couple. Now, it's not pretty. It's not Fox and Friends. It's not, it's just a couple dudes, right? A couple rough dudes that are ex-military, but I think they're trying to be as honest as possible. And that's what we're looking for. Okay. All right. So here's the thing that gets me, right? This is why I mention all this. It just doesn't add up. We could go on. There's 50 things, 25 to 50 things that just make no sense on this whole deal. But here's the thing that makes the least amount of sense to me is Jack Posobiec's out this weekend, right? Promoting, look, the left is doing this and, they're going to arrest us. If we don't arrest them, they're going to arrest us, So again, fomenting this, unrest, uneasiness, right? Again, creating civil war type conditions, all right, where you're angry, creating division between left and right, this and that, whatever. Look, to me, it's about truth. You know what I mean? I'm so sick and tired of this group doing that and that group doing this and transgender in the middle. So you really you get lost and confused over the whole thing. Here's why I think it matters is that, Alex Jones had this guy on Friday, right? That's how I knew to watch the show Friday night. If you would have seen that, the first call I would have made is I would have made a call to Bannon and I would have said, hey, Bannon, we need to show this. This is a major deal. You need to get the TPUSA team. We need to get we need to call this thing out, right? Because this doesn't make sense. There was nothing, right? I bet today there will be nothing, okay? So again, red flags all over the place. How could you let something like this go? This is like World Trade Center 7 collapsing, okay? It just doesn't add up. And here's the worst part, right? They destroyed the crime scene, right? They let the TPUSA guys go in there, remove the camera, do all the stuff they were doing. They should have had cops in there and blocking that crime scene off to investigate what happened and locking that place down, clearing people out, locking that thing down. Nothing. A couple of days later, it looks like they're pouring new concrete there. They're changing the whole surroundings and everything. That way you can never duplicate the crime scene, right? Even if this becomes an issue, you can never go back and relook at this thing because things have changed. You can say, well, this is the way it was, so you can never be sure, right? So that should never happen, right? That kind of stuff. So again, and yet the TPUSA, nobody's throwing a fit over this. Posobiec's in there talking about the left and they're going to arrest us and lock us up if we don't lock them up, again, creating this civil unrest. But he's not talking about two things he knows best, supposedly, right? Charlie Kirk, how his friend, and all the bogus stuff that went on around his death. And what's going on around in Europe, right, with Poland, World War III. So at that point, I thought I had respect for Posobiec. I don't anymore. I've lost almost all of it, okay? Same thing with all the other people around this TPUSA. Why aren't they throwing red flags up and saying, look, none of this stuff adds up. None of this, very little, if any, adds up about this whole thing. But they're not, right? Why not, right? That's the question. And you just don't know. Are they all in on it? Are they being paid off? Is he not even dead? I mean, I don't know what's going on. All I know is they want to sell to us low tech, right? 30-06, World War I weapon, World War II weapon, right? and I think it's the exact opposite. It's all high tech, right? It's AI, it's holographic cameras. There's something else going on here, and this doesn't make any sense. So why does it matter? Because it's a massive diversion. It's a massive diversion from what's going on in us allowing to give coordinates, okay, to Ukraine and Zelensky, right? And using and potentially our weapons, our Tomahawks, our ATACMs, our Anduril missiles and drones, okay, that we're using, that we are. And so the takeaway on this is this, that, you know, Ukraine is essentially a proxy for NATO, right? And so are the other things going on there. These drone attacks in Denmark, these drone attacks that are coming across Belarus into Romania, these drone attacks that are coming into, you know, Denmark, where else were they? Poland, okay, all these other things, you know, Russian airplanes coming into, you know, outside their zone. There's just something not right here, and this thing's heating up. And you know, and so anyway, it's a diversion. To me, this is one, and this is what I suspected when this was going on. Once you start raising red flags that something doesn't add up here, and just how clean that shot was, you know, it just, the 30-06 would probably have just left fragments and torn his head off, you know, and it would have been so bad you couldn't have even shown the video. This, what they showed was really bad, the bleeding out, right? But it's right on that edge of bad, you know. I don't know how to put it, right? There's the line changes, right? You know, it's kind of like you put a red line in and then it shifts. And I think the red line is shifting in terms of what we will tolerate, right? And I think this was right at the edge of what we were perceived to be able to tolerate. Ripping someone's head off with a 30-06 would not have been tolerable. That wouldn't have been able to be shown and shown over and over and over again to do what? To foment anger and unrest with the right, so that guys like Jack Posobiec can now come out and say, we have to get the left, because if we don't, they're going to come back and get us after this whole thing. Why does this matter? Because I think it all goes back to the technocracy, right? I think there's something bigger at work here, and that's why I spend the time on this. Otherwise, I'm not a pro at this. This isn't my thing. That's why I watch the guys who are, you know, and they don't even know, right? These guys will say, we don't know, but they're asking a lot of the right questions. If not, I wouldn't say all the right questions, but they're asking a lot of the right questions. So that's why I'll put that link in the bottom for you to watch today. Okay, so let's move on here. We've got this Takaichi wins in Japan. We talked about this last week, right? The issues with the LDP party and the weakness, right? We saw Ashiba come in, was a flop, okay, very weak, almost a fall guy in some senses. Same thing we saw with South Korea, right? Weakness in this Northern Asia region, okay? And is this intentional? I did a show with a guy who clearly is libertarian or maybe even left-leaning, and asked him some questions on this just to get his perspective. And he agrees, right? The one thing that we agreed on, even though we didn't agree on everything, I did appreciate his viewpoints, but what he said was, it seems to me like there's intentional weakness in the Northern Asian region, okay, with South Korea and with Japan. Now, here's what we get with this Takaichi, okay? Let's go through this real quickly, right? First female PM, she's pro-stimulus, so basically meaning more debt and stretching out these debt to GDP ratios even further, okay, which is already outrageous. If you look at Japan on a debt to GDP, it's like 300%. There's no one even close. She's considered a nationalist, okay? She's, you know, and then they can't wait to come out and say she's a fan of Margaret Thatcher. You know, Margaret Thatcher, you know, puts a picture in your head, okay? Strength in Europe, conservative, President Reagan, right? That era, you know, that 80s era, and you know, when things were better, right? Things back to that calm era, okay? She says she's a proclaimed heavy metal music lover and a drummer. So again, this kind of goes with Malay, right? Kind of that rock star look, you know, down to earth. People can relate to that, okay? She comes from humble beginnings. She's got a good story. So all this stuff fits, right? Now, she lines up with Abenomics, okay? Who was Abe? Let me throw this in here. Let me just put a picture up here so you can see this. Okay. So this is her on the left, okay, Sane Takaichi, and the next closest competitor was this Koizumi. And so there's obviously 5 candidates. I don't think the others had much of a chance. So here she is, she wins it, okay, and she follows in behind Shinzo Abe, okay, who was the prime minister during Trump 1.0. What was his whole thing? Okay, it was fiscal easing, okay, and it was defense spending, right? She falls right in line with that. What do they need? fiscal easing, okay, to keep this thing going, not have a sovereign debt crisis, okay, again, trying to extend these ratios, trying to make people feel comfortable, trying to get belief that you can allow these debt ratios to expand even further, and defense spending, right? I mean, for what? Why defense spending? Okay, to feed the private equity groups, to feed the war, to feed all this stuff that we keep talking about, and to feed, ultimately, I think, this technocracy, okay? Okay, so they're now calling it Saneomics. Okay, so Abenomics was so Abe plus economics, Abenomics. That was the big coin phrase during Shinzo Abe's tenure. Again, during that Trump 1.0. Now remember, Abe got assassinated with, I think, like a homemade shotgun or something like that. He was at a rally. He'd stepped away from politics, was going to make a comeback. He was at a rally and he got shot with a homemade shotgun, right? And so, dies, I think. I don't know if he died right away, but pretty quickly. So again, here we go again, right? Taking out of these political figures. Now we've got her, okay, coming back in, female, like I was talking about before. Okay, looser monetary policy, weaker yen, first woman prime minister. And all I can say is, again, a lot of women showing up to kind of take the fall because of the people. So the people don't get as angry at women, all right? Not to say she isn't qualified, not to say she isn't a genius. I don't know. All I can say is I just keep seeing this again and again and again. All right. Now she's going to become the leader of the prime minister and the head of this LDP, the forefront of the LDP party as the parliament votes are in later this month. So again, she's got 3 or 4 weeks here until she's actually truly in charge. Guess who's going to show up there about that time? President Trump. Okay. So President Trump's going to be there. And there's a lot of stuff going on there. So these are some of the policies we talked about last week, okay, that would become factors, right? U.S. relations, right? Number one. So again, President Trump going to be showing up. Defense, just what we were talking about. Bank of Japan, the weakness in the Bank of Japan. And I'm going to tear into that just a little bit, even though we've done a lot. Spending, talking about that, right? Looser fiscal policy, taxation, that's going to become an issue. Immigration. I have no idea what Japan's immigration policy is, something I just don't know anything about. And I don't know much about the taxation issue. So those are two things, even though I think they're down the list, I want to pay attention to those because I want to see what they're doing in those fronts, all right, to extend this thing out. All right, extend out this sovereign debt crisis. Okay, so let's see here. So the questions are these, okay? Can she really bring the party together? She's been a fan of easy money policy, hawkish when it comes to diplomacy, has been a critic of the Bank of Japan, lifting rates. Okay, so again, she doesn't want the Bank of Japan to raise rates. Japan held off raising rates recently with the idea that they would raise rates again probably in October, maybe later this year. Probably isn't going to happen now, all right? And again, President Trump's going to go visit her. I don't think he's going to be pushing higher rates either because he wants lower rates in the U.S., and we're going to see when we look at the debt market. The debt markets aren't liking any of what went on this weekend. Okay, they're very concerned. All right, so let's see how she falls. Let's see where she falls now as the election is over. Right, a lot of power will come to her from the polling. So again, what are they going to do? They're going to start polling the people. And what are they going to do then? Then they have to do mind control. Right, so it's going to be, can she be the one that can actually make people feel comfortable with the Japanese situation? Right, to continue to extend this thing out, right? Extend out more terrible Bank of Japan policy, more terrible lending, right? Lending and letting these GDP, more spending, right? Handouts, giving people handouts, right? One way to pacify people is to throw them a bone, right? Here's $1,000, here's $1,000, here's a tax cut, here's a this, here's a that, right? All these different things, just to continue to extend this thing out, all right? Now, so how will she navigate in the weakness of the eyes of the voters? All right. So I think this goes back to President Trump showing up there at the end of this month. Okay. And let me try to connect this. I'm going to keep it pretty simple with this. Remember, under Ishiba, we were in tariff negotiations, and it didn't look like it was going that well with Japan. It was a lot of over automotives. Why is that? Because a lot of the strength of Japan is from the automotives, especially Toyota, Honda, some of the others. Nissan, right? We saw Nissan having problems and trying to put mergers together at the end of 2024. Okay. So Japan needs this automotive space. Out of nowhere, Ishiba signs a deal where they give President Trump $550 billion to invest however he says, right? And he just comes out and says it. He's like, look, we got $550 billion check out of Japan to do whatever we want with it, okay? And then there's a payback, right? Then we pay it back in interest and so forth until it's paid. There's all these terms to it, okay? But essentially, it's a blank check. Now, how can a country that's this weak be handing out a $550 billion blank check? Well, it's debt, right? It's just running up debt that doesn't, so again, it's all a big, this is all a fugazi, right? I mean, it's one big scam. And so this is why the sovereign debt crisis continues to get closer and closer. All right. So a couple other key things here. There's an East Asian summit coming in Malaysia this month on the back of President Trump's meeting in Japan with Takaichi. There's an APEC summit, okay, that's also going to be happening in South Korea later this month, all right? How will this impact that Asian front, all right? This Takaichi is going to be and probably be promoted even more as a China hawk, okay? So that's not going to play well in Beijing, in China. Okay, where the decisions are made. So let me just blow through some of the stuff. There's so much I could talk about on this. Let's see. Okay, so let's just move on to this. So let me put this in terms, right? I was trying to think about how do you put this in terms of what's going on? How do I break this down so that it's simple takeaway and it's easy to retain? Easy for me too, right? Because sometimes you get so much information and it's good for me to kind of think this through. And I think of this as, there's crocodiles in the water, okay? And there's antelope, right? Some animal that wants to feed. They want to go in the water, right? But they know that there's crocodiles in the water. So what happens? The crocodiles lay low, they sit tight, and they just watch, okay? And they're very patient, right? They're playing the long game. And the antelope come in, and they're playing more of a short game, right? So they come in, and they start wandering around, and they get comfortable, and they're like, oh, there's no crocodiles. There's no crocodiles. So they go in a little deeper and a little deeper, right? And then what happens? The crocodiles strike. So that's what I think is potentially a decent way to frame this in terms of the debt markets, right? Can this Takaichi, right, essentially lure in investors into these debt markets? Because what's going on now is the Japan's own insurance companies, who are the biggest buyers and the most likely buyers of this Japanese debt, they're nowhere to be found, right? That part of the market has collapsed. So the only people buying the long end, the 30-year debt in Japan, is really the Bank of Japan, okay, and some foreign investors. Now, why are these foreign investors buying it? I don't know. I don't understand that. More of the story to unfold. But hopefully that's a good way to frame it, that she's got to be the one, right? Whether she's the crocodile or not, she's the one, the birds chirping, right, that are making everything happy. The whole environment's happy, and the antelope feel more comfortable going in up to their knees, right? And what's going to happen? We know the outcome of that story, okay? So can she lure in people into these debt markets, allowing these debt ratios to expand, allowing more government handouts to the people to pacify them, allowing more things to come in while this war effort builds up across this Asian front, okay, if we're heading into some World War III scenario that will extend beyond just Europe and Russia, okay? And why is this? I don't know, right? I don't understand the strategy or the tactics behind this. I just see what's going on, and I see this starting to unfold. Okay, so can she be that thing that lures in the prey into the water, right? That's how I see it. And who better than the first female prime minister of Japan, right, to do this, okay? Japan is a train wreck financially, all right? So is Europe. So is a lot of this region. But the key is, how long can they extend this thing? All right, that's the takeaway. Okay. So there was a 70%, just to wrap this up, there was a 70% probability that the Bank of Japan was going to raise rates on the 30th of October. Now that's probably fallen to about 20 to 30%. Okay, with her, President Trump, all these things we talked about. And so what does that mean? Japan was the only one in the world going against the grain and raising interest rates. Should the U.S. be raising interest rates? We're not. We're lowering interest rates. But are the markets going to decide this out anyway? They were doing everything we can to get interest rates lower. And, Craig's 3 to 6 months ago would have said, hey, this is great, but I'm starting to see things in a different light with this technocracy. Okay. And is this plan failing? And we'll talk about that in a second here with the UK. All right. The UK resisted the digital ID. All right. It's been and we saw Vietnam. The same thing happened there not too long ago. But we see the UK getting wind of this and they're resisting this digital ID. I'll come back to that in a minute. Let's take a look at some charts here, though. All right. Let's see if there's anything else. Let me, okay. Here we go. Let's take a look at this. So we've got, let's see, we've got some comments in here too. Let me take a look. So we've got, that's a lot of me talking. So let me see what we've got in here. Okay, Rachel Hawk, sounds like a great weekend. Yeah, it really was, Rachel. I mean, it was nice to relax a little bit. And I still got a lot of work done too. So that was good. Gordon, Geo Rich, LOL, seriously, I'm so sick of women in high positions, my local government. I don't have a problem with it as long as they're not being used, right? I just don't want them to be used for a bigger agenda. That's my biggest problem, okay? So I actually think more women in leadership in some ways would be good. But anyway, that's a topic for another day. We could get going on that one. And we really need two-way flow for that one. That's a discussion to be had rather than me just going off on it. Okay, the idea of independent Fed is a joke. Besant. So what do you mean by that, Rachel Hawk? When you put Besant in there, I'm kind of curious. You just threw out his name. I'm interested to see. Gordon Q, yes, it is. TZ Burton, good morning. Frank, hit the like button. Yep, thanks for that, Frank. Are you Swiss Frankie? Frank, are you Swiss Frankie? Yeah, I wish. Yeah, we're missing our Swiss. Yes, we're missing our Swiss Frankie. Okay. Everything about Kirk assassination seems off. I agree. That's kind of what we're talking about. My church is seeing higher church attendance after Charlie's shooting. Hey, that's a good thing, right? I mean, I think Charlie, again, who is Charlie? I don't know, right? I want to believe that he was a super great guy because that's what all his actions led us to believe. Was he taken out? I don't know. There's just so many questions. I don't know, right? I don't know. I just know that this whole thing with no blood on the hands of the medics just makes absolutely no sense. It's the most glaring thing in my mind that these people should be throwing a fit over it, but they're not, right? Okay, so everybody is a ballistics expert now. Yeah, I agree, Gordon. Everyone is. Hopefully I'm not proclaiming to be a ballistics expert. These guys in this video I'm going to put in there, these guys are high level, I don't know, they're high level Green Beret. I don't know all the different levels of these guys. I just know, look, I've done my fair share of long range shooting. I think I've been able to hit 1,200 yard targets, 12-inch plates. So, I mean, I'm okay. I mean, these other guys are really good. Put it this way, I can't hit it on the first shot usually, right? These other guys can hit 1,500 yards on the first shot. There's a big difference between what I'm capable of doing and what these guys are capable of doing. It sounds like that 300 yards, first shot, second shot. You're talking about a world of difference. A good, people who really know what they're doing, they don't miss, right? And they don't miss, number one. Number two, they hit it on the first shot. Number three, 300 yards is a lot different than 900 or 1,200 yards, okay? And some of these guys have reached out even further than 1,500 yards. Who knows what kind of technology they're using. But the point is, you're right. Everyone's becoming a ballistics expert, and that's okay, right? People are asking questions, and they're getting informed on it, right? So that they can make a decent judgment call, right? You almost have to become, at least, you don't have to become an expert at it, but you have to become good enough so that you can at least make a judgment call, right? And so that's why we look to these other guys. So again, you can either read a book and go out and do all this stuff, or you can listen to experts who you think are experts who are making good sense, and you can get up to speed pretty quickly, right? That's a lot, to me, that's a lot of how I do learning is I'm like, okay, find whoever's the best at this and then pay attention to them. You know what I mean? And then you're like, okay, I think I know a lot of what they know. All right, moving on. I can't be, when you're trading, you have to understand enough about markets in different ways to understand what's going on. So I wouldn't call myself an expert in anything, but you try to get up to speed on a lot of these different things. I'm trying to become, right, the foremost expert on risk management, how do you get in and wringing out the most amount of risk, right? That's why I'm working on this model, because once you figure out how to do it, then you want to get the tools to become, anyway, the point is, we all have to become somewhat of experts to make good judgment calls. All right. Okay. At least that's my thought. All right. Everybody, Jay White, please hit the thumbs up. Thanks for that. Gordon Q. Japan never reformed after the bubble burst in the 80s. That's true. Again, they just let it get out of control, right? Just like we did too. I mean, look, Reagan was a great guy, and I think his intentions were good, but a lot of bad things happened under Reagan that we're paying for now. Okay. And we could go on. We could go 10 threads on that. So again, we didn't fix it either. If you get a chance, watch Courtney and Patrick Wood's Technocracy show from last Saturday. Explains a lot. Yeah, I think that's true. Again, I can't even keep up with it all. So if you've got like 3 or 4 key takeaways, TZ Burton, for the audience, that would be great. If you're like, look, these are the key 3 things they were talking about, and if it supports anything I'm saying, or if it doesn't, it's even better, right? If you can come up 3 things that don't support what I'm saying, that's even better. But if you can find 3 or 4, if you can get some key points that either support or don't support what I'm saying, that's a beautiful thing. Okay, you forgot his name earlier. Patrick Wood. Yeah, I think you're talking about the Secretary of the Treasury. Boy, I still haven't, if that's what you're referring to. Think he was, no, it's not Bernanke. It's it doesn't really matter, but now it's bugging me. Let me see if I can get to this. We'll look it up real fast. Boy, it's just amazing how it escapes. We'll just look this up. Treasury Secretary under Bush. It's getting the first Bush. Paulson, Hank Paulson. That's the guy. So Hank Paulson was a Secretary of Treasury. Again, he was at Goldman Sachs, of course, right? Left Goldman Sachs, had $400 million of net worth, got a sweet deal, able to move all that money into safer things. As we went into the real estate crisis, okay, he was able to move his money without tax consequences because he became the Secretary of Treasury. So that's probably what was in it for him. Guys, he's a little different guy. I mean, he's a bird watcher. Nothing wrong with watching birds, but, Treasury Secretary and bird watcher, I don't know. It's sort of a little different, but it's better than pedophilia, I guess. So if he wants to watch birds and, then that's great. And I probably would like to watch birds too if I had $400 million. So the point is, it's a peaceful thing, right? Finding out. Anyway, he's the one that brought on Kashkari, okay, who's now the Minnesota FOMC president, again, who we have to watch because this guy's been in the thick of things. I mean, this guy's battle tested, maybe not on our behalf, but definitely battle tested. Okay, so that was the guy. All right, let's see here. Greenspan, LOL. Okay, so all right. Somebody's laughing at something. All right, so let's keep rolling here. Let's take a look at these charts. That's what we meant to do. All right, so we've got the dollar. Here's what I wanted to go through with the dollar. We'll look at this first, then we'll look at the end. So here's a short-term chart on the dollar. We have these old harmonic levels on here, okay, that extend all the way back into, November, December, October, November, a year ago. October, November, December in the dollar, right? And we have this white dash line, 98.57, 99.31. Okay, a couple key things we're watching here. Can this dollar start to rise above these old harmonic levels? And do they even matter, right? They may not even matter. I'd love to get new harmonic levels on this, okay? But here's the real takeaway. Technically, here's the dollar on a 4-hour chart, essentially a 4-hour chart. I put this purple shaded zone here, and you can see all the different times this thing has come up and tested it, okay? So this is the way things tend to work, right? It keeps pounding like a jackhammer, okay, on these levels. Right? And you can see this dollar is pounding on this level like a jackhammer. Okay. And here it is again. It's getting there right now. I'm not going to mark it so you can see it, but essentially the dollar's there again. Now we have this, this high that shot up here back in, this was July of this year. It made a run at 99. So it almost made a run at $100, right? Which is a big psychological level for the euro, for the dollar, right? Because why? Because the euro's on the other side, as we talk about. All these other currencies are on the other side of the basket. Dollars on the other side. 100 is kind of this line in the sand, right? Psychological line in the sand. So it made a run at that 100, sold off, got down below, or this time we didn't know that this level existed, right? Now we see this level, the ceiling, right, in place, right? This market's banging up against the ceiling, banging up like it wants to go through, okay? If it pops through, can it hold above, right? Then the ceiling becomes the floor. All right. This is a 4-hour chart, essentially a 4-hour chart on the dollar. Here's the daily. Looks pretty grim, right? You can see this expanding triangle. It's got this floor again, right? Look at this floor, this purple, again, where a couple times the market's gotten down to there. So if we pop above this, okay, if we pop above this on the 4-hour chart, okay, this purple shaded zone, right? Now what we're going to, and that's it like 98, let's call it 98, right? Then guess what? We have this prior ceiling, okay, on a longer term chart up here at 100. Okay, so if it pops above 98, there's a good chance that this dollar can make a run at 100, right? Now, what do we have? Does it pop above 100? Does it pop above that prior floor and into another ceiling on this daily chart? And what do we have to manage the risk against? We now have the 98 level to manage the risk against, all right, on the shorter term chart. So hopefully you can see what we're doing here with different time frames. We're using that 4-hour chart to see if the dollar can pop through that ceiling. If it does, hopefully that becomes the floor, right? Then what's our target? Our target is the prior floor on the daily chart, okay, where you can see that purple line going horizontally. What does it do when it gets there? Is it going to get stuck there, or is it going to pop through? Okay, if it pops through, great. Now we have the 98 and the 100, big psychological level, doesn't hold above there. Now let's look at the weekly. Okay, so again, that would make sense, right? Now we're back above this whole level. You can see, this purple line has had a fair amount of significance. Okay, and can it move? Can it move higher? That's the question. That's what we'll be watching for. All right, now let's look at this one. This gives us our monthly perspective on this thing. Okay, we see a pretty good energy build going on. You can see I've got this blue down in here, right? There's a decent energy build. And this market hasn't really gone up or down. Okay, so it's continuing to build energy from my perspective, right? The red lines are near the white. Okay, and that's that blue, the darkest blue shaded zone is the red going inside the white. That's how I'm trying to mark that stuff. All right, we're above the apex of this triangle. Okay, we have these purple lines coming together at that orange, little orange box in there. That's the apex of this triangle. So as long as the dollar stays above that, and that's at 95. Okay, so again, 95 is the drop dead zone. 98 is the level to clear to start to turn this thing around. Okay, gives us a place to manage the risk. Then 100 is a target, right? And then it gets above 100, and then we're starting to really talk about things like this, okay? 120, right? Because this thing could move quickly from that 100 to 120. Once the momentum shifts and this thing starts to go on the upside, and what's causing this, right? So technically, we're looking at this. What's causing this? Well, all this upheaval in France, in Japan, in the UK, in Asia, okay, in Southern Asia, right? Vietnam, South America, okay? And then you have the Genius Act and the Clarity Act, okay, which go back to this technocracy, right? Setting up the tokenization, setting up the stable coin, right? This connection between the U.S. Treasuries, right? And, how do I put this and keep it simple? We're going to come back and talk about that this week, right? This Genius Act and this Clarity Act are important, and we really need to break these things down because I think this is what can create the connection for the U.S. to look better than other countries in the world. Now, is this for good or is it for bad? That's up for speculation still. It's not looking good, but it doesn't mean for sure that it's bad, right? Who ends up with control of the privacy? Do we retain privacy? Do the people demand privacy? Do they even know that they're losing their privacy? And there's one thing, boy, man, so hard. One thing I wanted to add to this was last week we saw over the last couple weeks, we've seen a couple things, right, occur. And hopefully this isn't too crazy injecting it here. We saw this Electronic Arts, okay, a $55 billion takeover, acquisition, okay, by who? By Silver Lake. Who else was involved in that one? There were a private equity firm. Sovereign Wealth Fund, right? Saudi Arabian Sovereign Wealth Fund. For those of you who've been following Aaron Day or the Technocracy Roundtable, we've talked about these sovereign wealth funds and how they're playing a critical role in terms of money flows and different things and holding tanks for potentially bad things, all right? We saw the Saudi Arabian PIF, the Sovereign Wealth Fund, basically taking on over 50% of this Electronic Arts. Who's leading this? The private equity fund. So I mentioned this to the Technocracy table that think of like the PIF, this Sovereign Wealth Fund, is like a big ship on the sea, right? And you've got little tugboats like, the Silver Lake and these other private equity firms. It might be Andreessen Horowitz. I can't remember who it was, but there's another one in there. And so what are they doing? They're kind of guiding the sovereign wealth funds, right? They're on the inside. They've got the inside scoop in DC, right? They got the inside scoop on the legal side of things. They understand the players. And so what do? They take in the big money. They get a fee for it. They get compensated for it. And what do? They send off this, and if it's moving toward a technocracy, it's all part of, the dominoes that are unfolding. And now what are they doing? They're pushing this big sovereign wealth fund out to sea, okay, PIF, that holds Electronic Arts. Now, why does this matter? Well, because a lot of the same players that drove that deal with Electronic Arts are the same ones that drove TikTok deal, okay? So what does this mean? When you add TikTok together with Electronic Arts, you now have access to like 70 to 90% of the minds of people under age 25. Video games and TikTok, right? You're getting access. And what does that mean? Back to Posobiec, okay? Here he is fomenting anger between the left and the right. That's the last thing we need, right? Unless we want a civil war. So again, Posobiec needs to get back to defending his friend Charlie Kirk and how he died. And I really think he needs to get back to Poland and calling out the World War III instead of sitting here fomenting, unrest amongst, and he needs to get with his buddy Bannon, right? And these guys need to get together and really save the country instead of allowing this civil unrest to unfold. Because we start that, then it's all a mess, right? If the U.S. falls, the whole thing falls, right? So anyway, that's a lot. So back to this, okay, the dollar. I think it looks pretty good on the upside, especially when you see a lot of the rest of the world unraveling. And again, this is, I don't think anybody's going to be out there calling, very few are going to be out there calling for a dollar to climb above 100, and then if it does, to accelerate to 120. Am I going to be right? I don't know. All we can do is manage the risk, watch what's going on, pay attention to the backdrop, pay attention to the things going on in the world, and seeing that this dollar, it's been all I can say is, like, I've watched this for 30 years. This dollar has been pounded on for 30 years. And if you look at this, right, we've looked at this together. Here's our upward sloping trend channel. Since 2008 real estate crisis, okay, which again was another scam, back to Hank Paulson, back to Kashkari, okay, and these guys orchestrating this Wall Street bailout, okay, again, through Pelosi, through the Federal Reserve, through everything. You have this upward sloping trend channel that's undeniable, right? I mean, from this period of time back in here, if you look at that and you look at the trend on the dollar has been up. Now, people will trash this and say, yeah, but it's lost purchasing power and everything else. I mean, I've tried to dispute that many times in here, that the dollar is not an asset. It's a pass-through, okay? It's just a pass-through, right? It's a currency that money, that your time and labor passes through to buy a farm or buy a car or buy a house or buy an asset in the stock market or something like that. And this is the bridge to tokenization, okay? So the tokenization is sort of a replacement for this stuff. This is why we have to be concerned. Can this dollar rally off this level, right? Can it make a move from here, potentially up into here and potentially blow out these highs in 2000, back to the NASDAQ bubble, back to the the Patriot Act, back to all this stuff, right, that went on around 9/11, all these other things. Is all this connected? I don't know. But the point is this, that dollar looks okay. All right, enough of that. Let's look at the Japanese yen. Take a quick look at this. Again, they're talking about how the Japanese yen made a 2% move, and it did. Okay, here's the gap. Let me look at this. Let's see if we've got it. Okay, so here was the Japanese yen kind of plugging along to the upside. Okay, started to flatten out. We actually got some divergence right around in here. Okay, we got a little bit of an energy build. So again, giving us an indication the Japanese yen was getting pretty toppy. This was what, on October 2nd, right? We get the divergence in this area, right? Maybe a little bit of divergence, probably some little divergence back in here. But this one right here was clear divergence, okay? And then we get this gap down off the Takaichi LDP party win, okay? And now you can see the yen really hasn't made, here's where it opened up last night, and you can see here's where it's at now. So again, 2% gap down, but you really couldn't trade this. You were either positioned as a short side, and you actually capitalized on this, or you didn't. So it's like taking a blind bet, right? So again, not a good trade yet for anybody who's out there, right? Not a place to be until we see a lower risk spot to get into, right? Which might take another week or so, all right? And what's going to happen with this yen? Let's take a look at a longer term picture here. Here's the daily on the yen. And what this means is right now the yen is going down relative to the dollar. So again, this could be part of the catalyst that gets that dollar to start to move. Is it going to be Europe? Even though the euro is the biggest thing on the other side, the euro is the easiest one, right? The euro goes down, the dollar goes up, right? That's the easiest place. If it isn't there, then the yen is like maybe 6 or 8%, right? Instead of the euro being 50%. So it takes a lot more movement out of the yen to make that dollar move by itself. All right. Now you get the Australian dollar, you get a few other things kicking in. You got 15% of the value of the dollar, what's on the other side of it, and it can make it move. All right. So watching this yen, does the yen have a chance at getting a rally back up into this area or not? This would tend to go along with the 10-year note rallying. All right. Which the 10-year note's getting stuck. So let me, the reason we say that is because, look, it could come back up in here. This is a monthly chart on the Japanese yen. It could get, now it did retest it right away. It broke below and then it came back up and retested it right there. The question is, are we going to get another retest of this level in the yen? This would go along with the 10-year note rallying, lower rates like President Trump wants, right? So let's take a look at that real quickly. This yen and the 10-year note tend to go together. And we can see this 10-year note has really been struggling, right? We've got this trend channel that's worked pretty nicely. Okay, again, since 2008, I think. When was it? No, this isn't 2008. This is sooner than that. Let's see what we've got here. So, okay, so this is 2023, the bottom of this trend channel. This is only the daily chart. That's why. So you can see this thing's followed this upward sloping trend channel pretty nicely. We've got this 111.10, the white dashed line that we've talked about many times being the old residual harmonic structure. We've got the red line, the bottom of this upward sloping trend channel. They met right around in here. We also had an energy build then. You can see the blue box. We had an energy build. So the odds were that this 10-year note could make a nice move out of here. And it sort of has, but it hasn't got, you can see it's just riding this red line, right? It's just riding this red line. It can't really, it doesn't really want to go. Okay, this is a problem. If it goes up, I think we forego the sovereign debt crisis for a while, right? Because everybody can get lower rates. The whole world can kind of live off this. We can extend a sovereign debt crisis. If we don't, right, and if this thing starts to roll over, then we've got some problems, right? Because we're going to get higher interest rates with massive amounts of debt. It's going to blow up Japan. It's going to probably blow up most of Europe, and then it's going to probably trickle over to the U.S. The question is, what can the dollar do in the meantime? So again, not to sound so grim, but that's really what we're dealing with here with these sovereign debt crises. And that might be the lesser of two evils, right? That might be a lesser evil than the technocracy. This might be the thing that actually saves us is a sovereign debt crisis. The question is, who does it hurt more, us or the technocrats? That's the question. All right, so that's a lot of stuff to throw at you. Okay, let's take a look at this. Let's go look at the euro. All right, take a quick look at this thing. Here's the Swiss franc. We'll take a look at this one. So we've got here's a weekly on it. Let me see if I can turn this into a monthly. We'll just take a quick look at this. All right. I still have some stuff on there. Okay, so is this going to be beneficial to us? Well, I guess so. Let's take a look at this. All right, we've got an energy build going on here. Okay, red inside the white. This is part of what we've been talking about. It's better to look at this on the Forex market just because we can go back into the 1970s with it. This only goes back to probably 2000. Yeah, this only goes back to 2000. It's better to get a better look on this. But anyway, we'll use it. So we've got this converging triangle again. You can see where this thing kind of built up energy into that little space right around in here. And now it's kind of riding this thing. So the Swiss franc is going up. It's been moving up against the dollar. All right. Now, can this turn around? That's the question. And again, this isn't the best chart to show it. But the reality is, if we look at it from, from 2000 on, I would still say the Swiss franc, when I look at this, it's more of a bullish picture than it is a bearish picture. If we look at this longer term, and we look at this thing potentially basing down in this area, I can make a better case for a bearish Swiss franc, right? Swiss franc going down a lot relative to the dollar. But that's the case. I mean, here's the thing. You can make these charts look however you want, okay? I don't want to do that. My point is this, it doesn't look real good for the Swiss franc looking at this particular chart. If we switch over to the Forex, I can make a great case. But this particular, where will it stop? And let's dial down. Let's look at the daily. Okay. A break that back down below these levels in the Swiss franc. Okay. Something like this. You can see it spent a fair amount of time against this level. So basically 120, and you can see it's above that, right? So the Swiss franc is clearly above that relative to the dollar. Any kind of a move down into this area would then set the case up for the Swiss franc, right? That now you've got a line in the sand. You've got a place to manage the risk. Right now, the Swiss franc's up in space. So again, what I'm doing is taking the worst possible chart, right? The other look, and saying what would need to happen for the Swiss franc to actually look encouraging for this big trade that I think could be coming, okay? A potential truth trade. And maybe it's telling us it's not going to happen. But the dollar going up is the key here, right? This is a recipient of that. Swiss franc is small potatoes compared to the dollar on global trade. It's not small potatoes when it comes to influence, though. All right. Swiss franc has a lot of global influence. It probably ties into Israel, probably ties into China, probably ties into potentially even Ukraine and Russia and this whole European thing. So again, the Swiss franc's kind of sitting at the hub of all this stuff. What's going to happen here, right? That's why, if in terms of actual global trade, very small. In terms of influence, probably fairly big. All right. That's why we watch it. All right. And then let me take a look at this euro, and then we'll look at. Let's look at this euro. So again, the euro here is a monthly on the euro. Talked about this many times where, I think this was a big breaking point for the euro back in here. Yeah, I think I can draw it pretty easily. You can see this was a line of divide, right? Got above once the euro came out. The euro came out in like 2000, right? Great idea. Common currency. Problem is they never put together debt markets. And this is what we're seeing the problem with France right now. Euro takes off, goes up, spends a lot of time chopping back and forth through here, right? A lot of volatility. Then it breaks down. And ever since then, let me just mark this with this. You can see it's tried to retest those levels, and it can't quite get through. And it keeps making lower highs, right? And we're getting an energy build in here, okay? So we're getting the things we need to see for a potentially big move, okay? There we go. So there's the energy build. There's kind of a line in the sand, this purple shaded zone. The euro's below it. All right, we also have potentially some converging triangles in here, okay, right around in here. Let me change this to bright pink or something so you can see it. Okay, so there's the apex of this triangle, right? And again, you can see we've got a couple things. Apex of a triangle, potentially, and a consolidative upward sloping trend channel with those two pink parallel lines that it seems to have shown. You can see the little dots I have on there. I've got some dots that show some I didn't spend any time setting this euro up, so we're just looking at this on the fly. So we're just doing this together. The key is, can this euro start to make a move like this? Let me switch over to this. This would be our progression. We would like to see it start to go below that pink line, right? And then something like this, a move down into here. This would be parity to the dollar. So 100. So the euro would be at 100. At that point, I think the dollar would be above 100, right? The dollar could be at potentially, like, I don't know, 110. Maybe if it got there, 110, 112, 115, maybe somewhere in that range. Again, it depends on what some of these other currencies do too. It's not all euro dollar, right? There's other things that will have factors on this. So we can't say it to perfection that if the euro goes here, then the dollar will go there, because there's other, again, what will happen to the yen? What will happen to the Swiss franc? What will happen to these other things? But then the key is, if it gets down to there, you're going to be talking again about some prior lows. And then I'm thinking this euro could go back down and retest where it started, back here in 2001, back down around 80 cents. So it came out at 80 cents, climbed to what, 160. This is that period of time where Greece blew up. Again, the currency trade that Mario Draghi and Goldman Sachs got him into, screwed Greece, okay? And not their fault, right? The poor Greece people took a beating, with austerity that they didn't need to take. It was all because of financiers, Mario Draghi and the Goldman Sachses of the world, the Golden Slackses, who could care less how many people they hurt or kill. The point is this: now it's down to 80 cents. If that gets there, then this euro's cooked, right? France is already talking about there's no way out of this mess that they're in, and we're going to cover that here in a second. There's no way out of this mess that they're in unless they get outside the euro. Well, you know how hard that's going to be? Like the UK did the Brexit, right? And when they did that, they kept their own currency. They never got rid of the British pound. They joined the euro, but they never joined all the way. They never floated their own. They always kept their currency. And it was still a hard exit process. Think how hard this would be for France. It would implode the euro, right? So again, that's what we're looking at, this euro, and that's what we're looking at, is some kind of a move down into that the turquoise zone. That would be parity. That would be 100 on the euro to the dollar. But the dollar index would probably be higher than that. And then what we would see is a potential move down to that orange. That would be a retest of where the euro came out, where it was originated. And then from there, it's a free for all. How long do they let this thing go on before they basically shoot it, put it out of its misery? and try something different, right? Because it could then go to 60 to 40 to 20, right? It's just a matter of when do they shoot it and put it out of its misery at that point, right? And they will, right? You can guarantee that, the Eurocrats and the bureaucrats will be out. If that happens, it'll be we'll see. Yeah, I mean, we'll just save that for if and when that happens. Okay, and then one more quick thing. I want to look at this euro. I've got a little position on in this. Not much to show on this one except this. You can see it's following this upward sloping consolidation pattern, right? It made a nice move down. It broke some prior lows back in here. Okay, it clearly broke these, but this was April, so this was Liberation Day stuff right in here. The Australian dollar broke down. Okay. And then ever since then, it's been riding this consolidation upward. I think it's a consolidation, upward sloping channel that's going to break down. Okay. You can see we've got a big energy build that's occurring here. Okay. Red going inside the white. Okay. There it is. Energy build. The key is, can this Australian dollar make a move down? If it does, we're going to be looking for this, something like this. Again, we'll be looking at a lot of different things, but this is just generally speaking, this would be a 64 cents to the dollar would be a good spot to look at to see if it breaks down. If it starts to break below this upward sloping trend channel, then the consolidation period is over and the euro and the Australian dollar is in some trouble. Why does this matter? Well, it's a commodity currency, ties into gold, ties into metals, ties into steel. A lot of the stuff that goes to China comes out of Australia. We've talked about that for those of you who followed closely. And this ties in tightly with China. So that's why we kind of watch this stuff, right? We watch Canada for a commodity currency. We watch Australia for major currency pairs that have commodity components, major commodity components to them. Canada tends to tie more to energy, right? Crude oil, oil sands, natural gas. Australia tends to tie more to metals, and it had a really strong relationship to gold at one point in time that might be breaking apart. We need to see gold under stress to see what the Australian dollar does, right? But this kind of fits with the gold, and I hate to say this, but gold's hitting basically the 4,000. It's almost there. I think it hit 39.75 last night. So again, the gold trade just continues to march higher. Is 4,000 going to be a big psychological level that cracks it? Are these people gunning for that 4,000 for a big psychological level, and then it runs out of steam and we get the correction? I don't know, right? I don't know. I just keep trying the short side in the gold and letting the silver try to work. Okay, so again, why is that? Because the gold-silver ratio, which we've talked about. All right, I think that covers all that stuff. Bitcoin, let's take a look at that. Bitcoin's rallying again, back up to 125. So again, this case that these, gurus made, that I was listening to, my friends who've been in Bitcoin for a long, long time, and, this guy out of Australia and this head and shoulders pattern, it doesn't look like it's working, right? There's an energy build going on. You see that by the blue box. There's a lot of junk I have on here, lots and lots of junk I have on here with the idea that this head and shoulders pattern, could play out. But at this point, it's not looking to be the case. I still think, and Aaron Day thinks this too, all right? And, many of you may not know who Aaron Day is, but I think he's one of the foremost experts in the world on crypto and digital and privacy coins and just all around good understanding of things. Not to say he's 100% right? There's things I'm like, I don't know, but look, he is very, very good about what he is very good at what he's doing, and he's doing the work. That's the other thing, right? He's doing the work. I mean, this guy does an immense amount of work, right? The point is, and he's covering topics that no one else is covering, and he's doing a very good job doing them. So I recommend, if you get a chance, check him out. I mean, it's long. I mean, it's not easy work, right? I mean, he is long form. I mean, this guy does the heavy lifting, right? But he is really, really good. And he thinks, and I think, right, that this Bitcoin's a fraud and it's a rug pull, right? It's been hijacked. They're going to push it up. It's going to be used to draw people in. And it's potentially a lead into, universal basic income along with other things, right? Capturing assets into places where they control it, okay? So again, but right now, look, the thing looks great. You know what I mean? It's pressing on all-time highs, and you can't deny it. So I'm not trying to say don't trade it. If someone wants to trade it and they're efficient at it, by all means, knock yourself out, It's just, this thing is, it's not, I don't know. If that's what you're geared up to do and you're geared up to trade this thing, then that's great. It can be very rewarding. The problem with it is that, are you going to trade the futures or are you going to trade the actual cash? What version of Bitcoin are you going to trade? Are you going to trade it levered? Are you going to trade it unlevered? Are you going to deal with all the algorithmic trading that goes on in here? Are you going to deal with the gaps that occur, right? If you're trading the futures markets, are you going to deal with the amount of money they force you to put up to trade it with the futures markets, right? And then are you going to actually hold it and use it, right? Which is almost impossible to do. So they switched it from being this great currency to now it's digital gold, right? So now it's digital gold. So the question is now you never get rid of it. Okay, great. Well, now you're captive, so then why trade it? You know what I mean? So, again, 100,000 is the big psychological level, of course. I would start to say now this purple line starts to have some meaning right here. That's at 100,000, right? So again, I didn't realize that, but I just look at this level and I think this is important. Let me just get rid of these things so we're not confused by this. Let me get rid of a couple things on here because I just want to call out this purple line so it's easy to see. Well, let's leave that because that'll help amplify it. All right. So I'd say that, again, this 100,000 is becoming significant, right? It was significant on the way up. Okay. Big psychological level. It pulled back. It pushed through, came back and retested it a couple times. Okay. So again, psychological level, but also a good technical level now. So 100,000 is the spot. It's hard to bring the stop up anymore from this. If I were to do it, I would potentially say, these prior highs and these prior lows, about where that green is at. So about where, a little bit below where that green's at. That would be your next potential stop level. But it's tough. This thing could do that in a day. You know what I mean? Come down and what's that at? It's like 112. So that makes sense to me. 114 sticks in my head. 112 is a kind of a good line in the sand. I would say 111, 112 is a potential line in the sand, and 100,000 is obviously the big one. So, when you're at 25,000, it's hard to say, yeah, your stop's at 100,000, but it really is. That's really your hard stop. Big psychological level, big technical level. And, the green is a kind of a something you can use to, does it stay above that or not, right? If it comes down and retests that, 112, 111, 113, that's what I would try to use if I were trying to trade the short term. To do it any shorter than that, the data's not great on this. I can't get good data on this. I can't get it the way that I can use it. So that's why I don't spend a lot of time trading it. If I could get better data on it, then I would use it, right? But I use the futures data and it's not very good, right? It's thin and so forth. All right. Okay. So that's that. I think we've hammered these charts, man. I can really go here. Hope this is valuable to you guys. Okay. All right. So the French, I think we can get through this one kind of quickly. I mean, this is pretty self-explanatory. France, President Macron is in deep trouble. Okay. They can't keep this thing together. All right. So, let's see. Marine Le Pen, okay, she ran against Macron. She's his biggest antagonist. Okay, she's a conservative. She's calling for Macron to dissolve the National Assembly and that a new election could be in the cards, some kind of a snap election. They just had one of these not that long ago. This is how much of a problem this is. Macron says he's not going anywhere. He's going to serve out his fourth term. And as a result of this, the banks are selling off pretty hard. The CAC 40 has seen pretty good moves up. The banking sector has seen pretty good moves up. So it makes sense that this is a financial issue because, and debt market issue, currency issue again. But we can't really assess France because it's part of one conglomerate currency, the euro, right? So again, it has its own debt market, right? And the debt market can sell off, but we can't really assess the currency because it's one common currency. So it's why it's so tainted. This gives you an idea of why a portion of why this euro is such a terrible structure that was never built right, and it should come back to haunt them in a big way. Okay, the bond market's a conductor of the global market orchestra. Okay, and so when the bond market moves, everyone else has to basically move to the tune. All right, so again, musical chairs. When the music stops, right, somebody's going to be left without the chair. Who is it? It's probably going to happen in around Japan or in this European region. Okay. At some point, this will be fight for your own survival, I think. Okay. Here's the real takeaway on this. If one of the G7 countries, okay, we know those are the big ones, right? The G7s. These are those big currency pairs, right? This is the US, UK, France, Germany, The big ones. All right. If 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 any of these countries have had political or fiscal issues, right, the bond market sells off. Okay. And this goes back to that yen, goes back to that 10-year note we were looking at. And so people will normally look at spreads, right? What's the spread between this and that? The problem is these spreads sort of go out the window. People have been talking about, and I've brought this up a few times in here, but I think it's kind of heavy. You talk about these steepeners and flatteners and bear steepeners, bull steepeners, bear flatteners, right? I mean, you get into all these crazy things, right? It's not that hard. We've gone through it. I've shown you diagrams of those things for those of you who followed it closely. And we can do that again if someone wants, right? I'm happy to do that, go through what these things mean. But I think that's sort of like, it's sort of a fine-tuning mechanism looking at these spreads. Here's the real key is that, the raw, just look, all we have to really do is look at the belly of the curve, right? The 10-year note or the 5-year notes, all right? If the 10-year note, when this stuff happens, like in February with the UK and the US, okay, yields went up. In April with Liberation Day, the US, okay, yields went up. In August, right, with France, when this guy came in, yields went up. All right, when this, what's his name? LeCornu, okay, yields went up. And then in September again, right, happened in the US. Now it's France and Japan. Okay, so again, these G7 countries are all hooked at the hip. And how are they hooked at the hip? With the debt market. So this is why we've seen coordinated central bank efforts in the past, right, to try to keep this stuff under wraps. The problem is it's starting to get out of control. And this is why, this, just to wrap it up, and we're going to come back to this, but this is leading to war. Okay, this is what they do when they can't keep things under control. They go to war, and we're seeing that happen with Russia. And sadly, we're seeing us as part of this whole thing. All right, I wanted to show this quickly, then we'll come back to this war, and then we'll be done. All right, so all right, let's look at this. This is the UK. We'll probably be coming back to this a couple times. So this is that digital ID. All right, so here's what the government says. We will introduce a digital ID within this parliament to help tackle illegal migration, right? Make accessing government services easier, right? And enable wider efficiencies, right? We will consult on details soon, okay? And so what happens is within 48 hours, right, they had almost 3 million signatures against this, right? The people say, yeah, we don't want this, all right? And here's a little more detail on this, okay? The people of the United Kingdom are fighting back against the government's plan to roll out the digital ID system. The petition to counter the legislation quickly became the fastest growing online petition in UK history. With over 2 million, we see almost 3 million now, in about 48 hours. We demand that the UK government immediately commits to not introducing a digital ID card. We think this would be a step towards mass surveillance and digital control, and that no one should be forced to register with a state-controlled ID system. We oppose the creation of any national ID system. ID cards were scrapped in 2010, in our view, for a good reason. So this, I don't know who's putting this back out, but the point is, somebody's putting this back out, and there we go, and the people are signing it. Okay, so this is good, right? This is resistance against that technocracy, okay? The surveillance system, right? The lack of privacy, taking over of our sovereignty, all right? And it's good to see the UK pushing back. Now, how far is this going to go? How's it going to be curtailed? How's the government going to react to this? What are they going to do, okay? And what do we do, right? Are we asleep here or are we waking up? Are we going to be paying attention to this or are we still focusing on Charlie Kirk, you know what I mean, and these other things, which again, worth focusing on, but are we being diverted away from these other things that are going on? Are they taking over electronic arts and TikTok, right, to keep us focused on something else? Because again, we have to be the leaders on this, right? The U.S. really needs to be the leadership on this, and we need to resist this digital ID because where's a lot of it coming out of? It's really coming out of Silicon Valley. Who's pumping all the money in? Who's aggregating all the money through the sovereign wealth funds? We are, right? Who's bringing in the $550 billion blank check out of Japan? We are. Where's it all going? Into our tech, into our surveillance. So we really need to be the ones that wake up and see this stuff and call an end to it, because the UK can do it. Vietnam can give it a shot at it, but they really can't have any impact on it. We have to be the ones that step up and do this. We need to see what's going on around the world. Is our attention being taken away? Is Jack Posobiec going to help instigate a civil war and keep our attention off of this, the technocracy? Because we have to be the ones. I mean, we can get warnings, we can get canaries in the coal mine, but we have to be the ones that step up. We have to be the ones that take charge and stop this, because it's coming out of here and we're aggregating the money to drive it. So that's the big thing there. All right. And then quickly, I just wanted to cover this on the war front. And here's one of the things I got on this, right? I think this is kind of interesting, right? So this is the USA. There is no one coming to our rescue if things go sideways. No one will be resupplying us. No one will airdrop food, ammunition, medicine. There is no place to escape to for freedom. This is it, okay? And all right, and then we've got this, right? This is the U.S. to provide Ukraine with intelligence for missile strikes deep inside Russia. Now, this is a story for another day. We've already gone long for today. I can't believe this is. I guess I can believe it.